The whole point of crypto in some ways was, trust nobody. And, decentralization is the key. But here what we see is a lot of people were tricked into trusting FTX and having their deposits there. And it was a centralized exchange, which caused all these problems. So it's like, it almost violates the principles of what the whole product market fit was supposed to be. So what should sort of the observer expect, and what do you expect as a business in terms of how governments now react to all of this?
Decentralization is a very important aspect of cryptocurrency because it serves to be the moral ground upon which a lot has been created. A currency which cannot be controlled by any centralized body or organization has been enjoyed by many over the years, but this has, however, seen its downs from ups as certain bodies have manipulated users into a centralized program of service. For instance, the FTX saga saw a lot of users tricked into having their funds placed into their platform and a crash set in. Chamath reminds us of the reason why this is possible, and it all boils down to FTX being a centralized exchange, which means that it was always prone to control from centralized bodies and authorities. So, with all this chaos already in play, how was such a disaster even possible in the first place, and what is to be expected from the government? Chamath speaks on the situation and how it will affect the future of cryptocurrency and the market in general. Please don't forget to hit the like and subscribe button before we hear from Chamath.
Problem is bigger than FTX. And I'll say the uncomfortable part out loud, and nobody needs to necessarily comment if you don't want to. But there were an enormous number of venture firms that talked their way into just completely doing zero work here. Who's the guy that works at Founders Fund? Bulgar?
Delian.
Delian, thank you. Yeah. That tweet that he had where he basically took the snapshot of the Sequoia transcript was one of the funniest things that I've ever seen. I mean, this was a $215 million decision, and Sequoia documented it and put it on their own website. And I think that's an example of something that was happening, which is people just looked the other way and didn't even want to do the layer of work.
Chamath, let me just string together a couple of things we've talked about over the past few episodes. And I think you'll agree with this point, but generally speaking, there seems to be a very heavy lack of governance in investing, given the amount of capital and the velocity of capital in Silicon Valley, particularly in private markets of late. Where last week we talked about super voting shares, and the founder does whatever they want, and there's no governance, and there's no board, and there's no oversight. And particularly with this FTX situation, where clearly there wasn't a board that was, getting the necessary information, that had the necessary influence, that had the necessary controls, the meta conversation. But all of these threads tie together the concept that maybe there's not a lot of governance and not a lot of diligence going on. And the amount of money that's flowed into Silicon Valley has allowed a lot of this loosey-goosey behavior. And
I agree with you.
Here's the consequence of it.
I just want to say the second uncomfortable thing out loud, which is there was a lot of venture firms in Silicon Valley in this period of both not doing any work or diligence who also took the extra step and actually created classes and would teach teams how to create these tokens. Okay, and those artifacts, those video links and artifacts are sometimes on their website. They're still on YouTube. They're inside of Twitter. And what these folks would do, and we talked about this, the game that they played was they would get a team, they would create a token, they would also buy equity at some crazy valuation. The equity was locked up, but the tokens were not. And then they would put them on an exchange and sell them to unsuspecting people, and they would be able to dump these tokens. Look inside of that trend, what you're going to see, and Brian just mentioned this, those were the sale of securities, except it was done in a completely unregulated way. So if the SEC is really, and the DOJ is really going to take this FTT token issue seriously and what happened to FTX, they're going to start to look at a bunch of other tokens and token sales, and you're going to end up looking at some very well-known venture firms inside of Silicon Valley.
As it is well known, the rich and powerful have a tremendous effect on how the world's economy tends to become in the long run, and it was only time that separated this inevitable fate for cryptocurrencies. FTX can't take the full blame, as it was only a pawn in a much bigger game which has left it to pick up after itself, and this can be seen from the analysis which was given by Chamath. According to this analysis, it is seen that a lot of ventures and enterprises which were present on FTX didn't add value through work on the exchange. Even though with private investments outside of FTX, it is still seen that the rich just get to invest large amounts and no regulations or checks are done by the government because they just tend to look the other way. And this leaves the lower class members of the society to suffer the consequences of losing parts or all of their funds on the big stage of trading. Silicon Valley is home to some of the richest people in America and has seen a large amount of capital in investments, so holds the title for a lot of manipulation which goes on in market prices of equity, stocks and the likes through private markets. And as said before, with no checks from the government for such ventures, these manipulations tend to affect those who aren't in this league of power. Further on this area, Chamath points out that some schemes devised in Silicon Valley where these venture firms, who haven't done any work or added any value to the market, went on to buy equity in large amounts, set up teams which were taught how to create tokens for these manipulations to occur, and sell these tokens on an exchange to people who aren't in the least bit suspicious that they are buying dumb tokens. Through such activities, they can gain massive profits with their equity being locked and get away with being richer because of the lack of checks and balances. If this issue is however taken seriously for the FTT token by FTX, there are sure to be major discoveries of major ventures all traced back to Silicon Valley.
That token, guys, let's be honest, is not the only token that has been engineered by Silicon Valley venture firms. And it is also not the only token that's gone to zero that was engineered by Silicon Valley venture firms. My biggest purchase ever was Bitcoin in 2011. I've bought a bunch of these tokens that have massively depreciated in value. I think lots of investors have. I kind of fell into it as well. Like, I thought, wow, this is incredible. I get to buy these tokens. They do all of this cool stuff. They represent all this value. And my experience has been the opposite of that. I've lost a lot of money in these things. And so, I really hope that regulators, not just obviously, I hope that regulators do the best they can to get investors' money back in FTX. But I really also hope they figure out all these other tokens as well, because you can just rank them in terms of market cap, start at the top and work your way down. And you will see that these were unregulated securities, Jason, that were manufactured and sold by our brethren.
Centralization has continued to be a major problem in the crypto world, with situations like this tending to rise at certain points in time where wealthy people pump and dump it for their profit. If you all can remember, this was also seen in 2021 when Elon Musk advocated for Dogecoin, and a lot of people jumped on that train ride and were left injured when the dump began. This is why Chamath has hinted at the importance of regulatory bodies, which are in charge of making sure that the market becomes more balanced. They should, as is expected, also try to solve the situation with FTX when investigations are concluded and try to get those who invested their money back, while also fishing out some of these dumb tokens created by these rich individuals for their selfish gain. This will go a long way in preserving the sector of crypto investments and bringing back the trust of people and individuals in the sector. With all that's been said in this video, what are your thoughts on the points made by Chamath? Do you agree or disagree? We'd love to hear your take in the comment section below. Be sure to subscribe to our channel if you haven't, for everything you need to know about crypto. See y'all in the next video.